Hey, hello and good morning, everybody. Hi, my name is Darius Anucauskas and I'm the Chief Market Analyst here at Markets.com, and today is Friday. Look, we went through a lot of different things this week. Don't get me wrong, next week is even, I don't know, worse, better, it depends on for whom. But yeah, this week, like I said, we went through some political issues in Europe and Japan. We went through some economic data in the US, which was, I wouldn't say on the best side, but we'll look into all that. Let's see how the week has ended or is ending still. Yeah, we'll pick up on a few important events which are happening next week as well, so in order to prepare ourselves. But certainly, let's see what has been happening this week. Ladies and gentlemen, I'll see you in a bit. All right, okay. Hello, and good morning, everybody. Hi, my name is Darius Anucauskas, and I'm the Chief Market Analyst here at Markets.com. And today, ladies and gentlemen, is Friday. So welcome, everyone. We made it through this week, and we had an interesting week, I would say. Look, it was full of political, economic events, and as I keep on saying, and you probably already are tired of me saying the same thing over and over, every week since the beginning of this year seems to be like a very, very interesting week, honestly. Like, there is something happening all the time. So look, about all this and a little bit more in a bit, let me just quickly go through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. In the meantime, I will put my usual good morning in the chat room, everyone. There we go. Yes, boom. Right. So yeah, I hope you're feeling nice and relaxed in a way, or if I would say, ready to get relaxed and going into the weekend. Yes, it was. If you were trading this week, it was a busy week. I mean, it's yeah, like we had some political turmoils and some economic disappointments as well. So look, apart from a few things, of course, but I'll talk about all this in a bit. Another quick mentioning here of our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. And also, I am going to be running a webinar at the end of September, on the 23rd of September, on Tuesday. So yes, check this link out. It will be in the description of this video. After I finish the webinar, I will throw it in there, so you'll have it there. You can always revisit the webinar. But yeah, like I said, check it out. Hopefully you will enjoy the webinar. It's going to be about the RSI indicator. Now again, for some, maybe you're using it, maybe you're not using it. What we're going to do is basically I'm going to talk about it, and then we'll just try to apply it in practice, in real life market action on our demo account, of course. And yes, we'll see how it works, or if it works, or if it doesn't work. Can we kind of solely rely on it? Because I had a session at the end of last month, and it was on MACD, and that was amazing, and certainly it was a good show. And yeah, we saw a nice activity in there, and it was very, very interesting to understand, like, how the MACD works, and does it work. So now this time we'll try to apply it on the RSI. So ladies and gentlemen, without further ado, let's jump into the charts, and probably let's have a look at the economic calendar first. You know what, I'm gonna make this as a new tradition, and I think that would kind of just set the tone, the stage for jumping into the charts. Now look, today, straight away, let's have a look at what's happening today. Basically today we came out with some data from Japan. I can see that from China there's nothing major, but actually let me refresh the page here a little bit. Yeah, So we came out this morning with Japanese industrial numbers, so the year-on-year and the month-on-month final figures, and well, those are a bit of a disappointment, ladies and gentlemen. Again, we're seeing Nikkei kind of rallying, but or yeah, it was yesterday. It was rallied today, where it's a little bit subdued. Maybe that's it's kind of calming down a little bit, because again, the numbers are not very great. I would actually say even worse, but better than the forecast on a month-on-month basis. That's fine, right? It's better than the forecast, and certainly, the market can live with that. However, the year-on-year figure is a total disappointment. So, trade balance for the UK, increased deficit here on the UK side. GDP month on month 0 as expected, and the year-on-year figure 1.4 against the previous 1.4, and against the forecast of 1.5. So a little bit of a disappointment. Yeah, in general, I would say not the best numbers here coming out from the UK. EU, Germany, harmonized inflation rate, final year-on-year 2.1 as expected. Look, it's rare when the German actual number doesn't comply with the forecast, because kind of it's the same thing all the time. But yeah, German inflation rate, official one 2.2 as expected, so a little bit higher than the previous on the year-on-year side. On the month-on-month side, it's a little bit on the lower side. Okay, UK manufacturing year-on-year lower than the forecast, but still better than the previous. The month-on-month is a disaster. Okay, look, not very good numbers from the UK coming out. Now, going further, we will be today we will be getting the Michigan consumer sentiment, the preliminary number, and at the moment the expectation is a little bit on the lower side. So, of course, let's see. I think that this could be a market mover today. Check it out. It's going to be like half an hour after the US market opens, and yeah, well, we might see a little bit of volatility in there, because again, we don't have much stuff happening today. So we will probably, we'll see some sort of volatility just based on that number. However, look, I will pick up on the US stuff in a bit, but let's have a look at the indices, ladies and gentlemen. We popped higher yesterday. Yesterday, the market rallied significantly, and of course, we saw strong activity in there. Look, for now, everybody's kind of hoping, to see those rate cuts. And again, my issue is that maybe we're rallying because of the expectation, and the expectation right now is, let me show you what I'm talking about. The expectation right now is that we're going to get a cut, right? And it seems like it's a done deal now. So the cut is a done deal, but what's not a done deal is the probability for a 50 basis point cut. So are we going to get that? Look, different market analysts are talking about that we should be getting the 50. I really don't know if this is a good thing, because look, in the US, I'll pick up on inflation in a bit, because that's quite important, but let's finish off with Japan. So with Japan right now, look, next week next week, exactly in a week's time, actually, on Friday, we're going to get the interest rate decision from the BoJ. Let me show you what I'm talking about here. So BoJ interest rate decision, so they're expecting the rate to remain the same. So I think the Japanese Nikkei is enjoying the moment and kind of rallying up until then, right? But the thing is that in October time, we are expecting a hike from the BoJ, from 0.5 to plus 0.75. So plus 0.5 to plus 0.75. So basically a 25 basis point increase. Now, is that gonna happen? Well, let's have a look at, if I can find here, Japan inflation. What's the ticker for that? There we go. That's the GPR. GBPIRYY. Okay, there we go. So I would know in the future. So yeah, look, the inflation right now, the Japanese inflation is does look like something like this. So it is elevated. So of course, comparison to where we were back in, you know, in the beginning of 2021, yes, we're kind of much up here, you know. So in a way, for Japan, they're trying to kind of maintain this, and they're trying not to allow this to travel higher. And in a way, I think in countries like Japan, it could escalate very quickly. So that's why the central bank is trying to do everything it can in order to kind of, you know, keep it under control, because again, like I said, it's just the specifics of the economy, and in Japan can escalate everything very, very quickly. At the moment, we're seeing a bit of a decline. However, certainly it's not the final story that is just gonna go lower or something like that. No, it's on the contrary. If you would ask me to apply even technical analysis on this chart here, you would see that, look, we're currently in a somewhat of a range, maybe a triangle, actually even, I think even better. I think we're in a falling channel pattern, right? Something like this. There we go. Look at this. Very beautiful. So normally, like I said, you don't get me wrong, you don't do that, okay, guys? This is just kind of for entertainment purposes, right? If, let's say, you know, we do that, when we do apply something like this, something like technical analysis on such charts, then you'll see that the prevailing trend is to the upside. We're entering a range. It's a falling channel. The greater chance for this one to break out is to the upside, period. That's however, that's, of course, that's theory. Just, and this is okay. For some reason, my OBS has disconnected, and I hope you can hear me and see me well. I mean, I can see my software here has been disconnected for some reason. I don't know. Like, I mean, can you, ladies and gentlemen, can you hear me and see me? Because for some sort of a reason, I had the disconnection here on my side. But interesting. Well, actually, to be honest, the whole week I'm having this fun with connecting and disconnecting, and as you saw, the quality on Monday and on Wednesday wasn't the best, because again, like, there were some updates happening on the computer, and for some reason they started off without my knowledge. And anyway, honestly, it was a bit of a bit of a bad moment, I would say. Anyway, coming back to the Japan story here. Look, next week, like I said, they're planning to go to do those interest rate kind of announcements. Of course, they're not going to do anything, but going into October, the end of October, they're planning to go for that rate hike. So maybe the Bank of Japan knows a little bit more than we do, and maybe that's why they're trying to be ahead of the game and trying to go for those hikes. That said, the new party that came in and took a lot of seats in the parliament, in the Japanese parliament, those guys kind of oppose the hikes, and I don't know how they're going to balance all that. And they're more in favor of rate cuts. So again, I think that the BoJ, unlike the Fed, will be more into the inflation part. So let's see how this is going to play out. Of course, certainly at the moment we're watching this carefully, and we're watching the index here, the Nikkei 225. So look, we're at all-time highs, of course, and we hit the almost hit the 45,000 zone, the cash index, the psychological level. And certainly now the question is, can we go further north? Well, I would say this way: as long as we stay at somewhere above this 44,000 territory, I'm going to continue targeting the upside. So this is, like I said, this is just kind of, I would say, common sense in a way, because again, this is a good area of resistance. It was a good area of resistance, then we broke it. Now we could take the role of support, which is logical. But at this point, look, am I chasing the market? No, not really, because I am a little bit careful with these. So if I do see a retracement and the hold up above the 44,000 zone, then yeah, maybe it's interesting to go in, and go further up. But here, I'm not chasing the market. It's just I'm observing it. Yes, it might travel further north. Don't get me wrong. I mean, but look, it's up to you. It's always up to you. Whatever you do, whatever you're comfortable with. because you know yourselves better. Now, my downside scenario will be a little bit more from this break below the 44,000 zone, and maybe this 43,935, something like that. So just, but in general, yeah, I'm watching the 44,000 zone. If we do drop back below it, I'll consider a little bit of a retracement back down towards this upside line taken from the low of the 4th of August. Let's jump into China very quickly. China, look, beautiful, finally. Beautiful pop. And if you're, ooh, almost knocked off my microphone. If you watched my Monday and Wednesday show, and I talked a lot about this, and last week as well, I talked about the China 50 index here. I said to you, look, we're in somewhat of a range. The greater chance for this one to break out is to the upside. Why? Because we look at the prevailing trend. The prevailing trend was to the upside, so before entering the formation, and that's why the greater chance for this one is to break out higher. Yes, we had a bit of a false breakout here on the downside, and I said to what we need is not only a false breakout, we need a normal clearance with the body of the daily candle staying outside of the pattern. There we go. We got that. Now we're seeing a little bit of a retracement. That's fine. If we continue to trade above this hurdle, above this 15,050 zone, I will continue targeting the upside. If we somehow fall back inside, I will consider a kind of a retracement back down within the range, and then we'll kind of take it from there. Because what I'm watching here is, of course, is the how this is going to end today. Because are we on a weekly chart? Are we not going to get just a false breakout? If we're not going to get a false breakout, then yeah, my next target is this. Oh, my honestly, I need to change my mouse. The highest point of October of last year. That's what I'm going to aim for, and the 15,400. I think that's a good area to target. So let's see how this is going to play out, ladies and gentlemen. Let's jump into the U.S. Boom yesterday. Boom, very good. Perfectly, that was a good moment here. Ladies and gentlemen, let me know, please, in the comments if you can hear me and see me well, because again, like I said, something's happening with the stream here, and for some reason it is crashing a little bit. So keep on getting these interruptions that the connection, keeps on failing here. So the internet is working fine, but for some reason I'm having this whole week. I'm having this issue here, and for some reason, yeah, the internet is fine, upload speed is fine, so everything seems to be normal. But again, for some reason, the software is not really loving the connection with YouTube for some reason. Anyway, hey, it's one of those moments where unfortunately technology is kind of failing on you every time. But yeah, let me know in the comments if you can hear me and see me well. I would be more than happy. I would be happy if you could do that, because it would help me to kind of go further. So anyway, ladies and gentlemen, so yeah, watching this now, where we hit the new all-time high on Dow, and if you remember, on Monday, on Wednesday last week as well, I talked about this idea where whenever we hit an all-time high on one index from the top 3 US indices, then the other two tend to follow. So the other two tend to follow, and normally this is a sign when the market is ready for a little bit of profit taking. So let's say in this case, we saw Dow was the second one, that was hitting the all-time high. The S&P was the first. There we go. I talked about this idea of a rising wedge pattern on the chart. What I want to say is that yes, yesterday we pushed higher. We made our way above this upper side of the rising wedge. So in a way we can scrap the idea of a rising wedge, because rising wedges tend to break to the downside eventually. And normally, yeah, like I said, if we do get a clearance of one of the sides, then that's it. We remove it. We move on. The only thing is that I don't want to rush into that. I'm going to remove it on Monday. Because why? Because I want to see how today's day is going to end. Are we going to end still above this upper side of the rising wedge, or actually we're going to see some sort of some sort of like a move, a strong sell-off, and a move back inside of the pattern. If we do see the move back inside the pattern, then yes, the weekly chart here will have a nice little false breakout. So, and if that's the case, and if we do see that false breakout on the weekly chart, hey, ladies and gentlemen, I'm looking for some lower areas. Again, don't get me wrong, it's not guaranteed, but certainly it increases the chances for a possible move to the downside. Because again, well, that's theory. You know, you can go to your textbooks and you can find that, you can find those, you know, explanations there. But again, is that 100%? No, never. Nothing is 100%. Honestly, that's why, you know, in trading, in general, especially in trading, nothing is 100%, and it's you know, we try to apply our knowledge, our, you know, experience, our kind of observations that we have done over the years, yeah, as much as possible, and certainly we try to apply that for trying to determine future price action. Anyway, quickly on NASDAQ, and also beautiful all-time high. We did that on Wednesday. We did let me just double check, 24,011, 24,015 yesterday, new all-time high. Today, almost came on the cash index. So yes, I'm looking at the cash index, by the way. So certainly, what we're watching here is the breakout right now of this 24,000 zone. And look, what can I say? For now, let's observe this. It looks like an ascending triangle pattern, but don't get me wrong, such patterns, yes, they do tend to break to the upside, but I've seen this happening in the opposite direction several times. So that's why we need to see what's going to happen with this hurdle first, with this little area right there. If we do remain below the 24,000 zone, then maybe we are ready for a little bit of profit taking on this. Look, long story short, certainly I don't want to sound like a pessimist and everything, or the person who keeps on, you know, trying to call out a market crash, but the stock market continues to rally. So, you know, I'm not one of those, but a bit of profit taking, hey, why not? However, before that, we need to check if the market is happy to do that. Look, yesterday's economic data from the U.S. Let me just jump into that. We got the U.S. CPIs, and the U.S. CPIs came out at on the higher side. The headline came out at 2.9, as expected, to be honest. And this is what I was talking about in my recent videos. You can check them out here on YouTube and on our channel. I talked about the US PPI, CPIs, and yes, I talked about, in this latest one, I talked about the inflation part, and certainly what I was saying is that for the CPIs, I was expecting them to come out somewhere around the same level, because the PPIs, I have to admit, I was hoping to see numbers somewhere in between. This is what we got this week on Wednesday. I was hoping to see somewhere in let's say in between here. Where's that PPI month on month and the headline one? 0.3 was the forecast, 0.9 was the previous number, but then it got adjusted to 0.7. So I was hoping the actual number will be somewhere in between here on a month-on-month basis. But hey, look, I don't have a crystal ball. I only have my leather ball here, and I'm trying to use it as much as possible. But okay, that's fine. Look, the PPIs came out as a surprise, to be honest, but I wasn't really sure that the CPIs will be like on the lower side like the PPIs. Why? Because look, it's CPIs, nobody passes on. You know, if you get like a reduction or your prices drop, if the company suddenly, you know, has a drop in costs, they're going to keep the prices the same. You know, because in a way that's like contingency, you know, for next time. Let's say when the prices go up, let's say rapidly, and the business is not ready, so at least they have a little bit of cash in order to protect themselves, you know, from these fluctuations. So in a way, you know, it's never cheaper for the consumer. So it's cheaper for the company, but not cheaper for the consumer at the end. So yeah, we saw these big moves here. This week we also had the Apple event. If you saw the new, the new iPhone, and we had the moment here. So the stock market did the stock of Apple did drop, and look, it's normal. I mean, the rally before was one thing, that's like buy the rumor, sell the news moment, and when the new apparatus came out, yes, the stock drifted lower. So a little bit of profit taking as always. This week we're seeing NVIDIA kind of trying to climb back up as well. Technology is a driver. Apart from AMD, AMD is a little bit on the lower side. Now, Google, unlike, yes, Google is enjoying the moment and continues to rally. And look, but of course, eventually it will have to correct lower. It will have to kind of, push back down a little bit. So let's not rush into things. I mean, at this point, again, like I said, I don't want to sound like a bear or anything like that, but certainly just be cautious a little bit. So yeah, and let's have a look at Microsoft, a little bit still in decline. Amazon, what's happening with Amazon? Somewhat flat. But yes, of course, the big story this week, Oracle. Oh my God, like honestly, Oracle jumps. If you have been holding this stock, congratulations, you did very well this week. Look at this jump, massive jump, boom, to the upside. Good results apparently from Oracle, so they were happy. The market was happy with the results. So great. Look, I mean, everything seems to be fine on the technology side. Broadcom, doing great. So getting those contracts from the UAE. Everything seems to be fine, but my problem is, let me just see if I can find this chart that I'm looking at. So I looked at it before, and I wanted to kind of show you what I'm talking about. So if I'll quickly find that, I'll show you, ladies and gentlemen, but certainly it's basically I wanted to show you the chart by sectors. I think we can find maybe this one here. Let me just see if it's going to load up. So maybe, like, let's have a look at here. So we have these economic cycles, right? When I think this one is a good one. I think now this the yellow line here is the stock sector and the business cycle. So the blue one is the business cycle. The yellow one is the stock sector. So apparently, we're at the peak here when we get. When we have energy and metals kind of on the top side. Technology, according to this side, this chart, we can see that technology right now, we're here, right? When technology is booming and everything, so we need still to go through these elements here. But again, this is the problem. Every chart kind of in a way shows a slightly different story here. So bull market, we're at the market top. Apparently we're not at the market top yet, according to all this. So according to all these things here, it seems that we still have a little bit of room here, but basically technology will start declining. We'll see basic materials and staples and those picking up traction. And energy, of course, also picking up traction, and then we'll have some sort of a retracement. So, in other words, technology will start declining. That doesn't mean that we are in a bear market suddenly. Maybe we're seeing some profit taking from technology, but then the market needs to jump into this kind of moment where oil prices rally significantly, and certainly then yes, we could see this move. Let me just actually jump into this chart here. So the S&P 500, there we go. So this is a monthly chart, And look, last time, 2007, when we had this crash here, let's actually, can I just find oil here very quickly? So oil right now is declining, and in 2007, look at this, oil started rallying like crazy. We are at the lows. We were seeing a correction, but then in 2007, it just exploded to the upside. That was the biggest move we had, and that was the all-time high here. We reached that, and then the market just collapsed. So long story short, what I'm saying is that in that case, we need to see oil still pushing to the upside. So if technology is on the low side right now, on the high side right now, so it will have to be substituted by another sector which will rally. And don't get me wrong, I mean, I said it several times that I'm still a bear on oil, and I am, but in at least in the near term. So I'm hoping to see a move somewhere towards the area of the $60 mark, maybe a little bit below, and then it would be interesting to see if we can actually jump into oil again, because if we, let's say, find support somewhere near the $58 mark and we struggle to move lower, well, to me that's like a potential sign that there could be movement in the oil market. And look, at the moment we're going through the period where OPEC is kind of producing and expanding, producing, creating more output. But whatever, things change, right? Things change, and that's why I think that there could be a moment where companies like, it's not financial advice or anything like that. Just like I said, based on the economic cycle, based on the economy and what we have seen before. So companies like Chevron, and actually let's have a look at those. Let's have a look at the monthly chart here of Chevron here, and going back into 2007. Look at this. Those guys rally significantly. Oil market rallies. These guys rally, right? Chevron. Who else in there? Like Shell. Let's check the Euronext on Amsterdam. There we go. So these guys also rally before 2007. Then they start collapsing very quickly. Again, it's a normal. Now look at this. At this point, okay, somebody might say, but hey, isn't this time for it to drift lower? That, I think, yes, it could drift a little bit lower, but I don't really think that that much lower it could drift, because I think that we need if we are planning to rally in oil at some point later on, not now, but then a little bit of retracement here could happen, but I think the market understands that, and that's why maybe the stock price is not going to get discounted that much. So yeah, long story short, I'm looking at this, of course. I'm looking at all these companies, Exxon as well in the US. Let's have a look at this one. There we go. Similar chart. So you can see here, 2007 rallied, then we sold off at the beginning of the crisis in 2008. There we go. So I think that there is a moment where we could see a little bit of a correction back down, but this scenario is a little bit different this time. It seems like we could see a correction lower. Like I said, if oil does drop towards the towards the $60 mark, then these companies might, in a way, do correct back down as well. But looking at, let's say, technical analysis on the ExxonMobil stock, we're seeing somewhat of a, I wouldn't say, kind of a range. I would say, like, it actually would say it's a range, because we're getting these nice false breakouts here, but we're getting this somewhat of a range. So if we look at the prevailing trend was to the upside. So in a way, there's greater chance for this one to break out to the upside. So keep that in mind, ladies and gentlemen. Certainly for now, it's an interesting moment that's happening here in the stock market. Let's jump into other indices, ladies and gentlemen. The dollar index, let's have a look at this one. So not loving for some reason, not loving the higher inflation numbers. I think what it's reacting to more is the fact that this will happen. There's a probability that there's going to be 2 rate cuts. The market is not happy. The bulls here of the US dollar are not happy. This will mean that more downside could come. However, am I getting very bearish? No. I said to you previously that my target is around the 96 zone. If we clear the 96 zone and we stay below it, then yeah, I'll go lower. But at this point, I'm just observing the price action. The German index DAX, this one is, look, the DAX likes to range, right? And we know that. So it does give us those pops. And look at this, yesterday it was selling off, but then boom, quickly drifted back to the upside. The stock market recovered. However, it's not as positive as the U.S. market. And a while ago, or recently actually, in the beginning of this year, it was the opposite. DAX was the the big gainer. Look, after this, or actually before this crash in April, DAX was doing quite well percentage-wise. I mean, look at this. Let me just show you what I'm talking about here. December, January, there we go. 2nd of January, we started off the market here. We rallied all the way here. Look, nice 18% gain. Wow, at one point. Then, of course, we sold off everything, and then we went into negative territory. It was like a moment for those who missed out on this rally. So there we go. Congratulations. You go in, and you went in, and we went in, and we did on another, like, the 25, almost 25% gain basically on DAX. That was like spectacular. I mean, we did, the 18 was already fantastic, but then this was a nice market manipulation. Congratulations to those who managed to capture the market here. And yeah, we rallied. So now the question is, can we rally more, or is this enough for this year? Are we going to stay somewhere around here? We're currently at around 20% on DAX. Is this going to be enough, or actually are we going to cut some gains of that again, going closer to the end of this year? Well, I would say, approach everything with caution, and keep your eyes on some key areas of support and resistance. So for the upside, I need to see a push back above the 24,000 zone, somewhere around here. For the downside, look, we were flirting with that 100-day EMA. It was a good. It is still a good line, and if we do clear that 100-day EMA, I'm going to lean a little bit more towards the downside, ladies and gentlemen, because again, if we clear the 100-day EMA, well, that's a bearish indication, so it kind of increases the chances for a possible move lower. But again, nothing is guaranteed, so we could also get false breakouts. Don't forget about that. Jumping into the FTSE 100, so yes, it's enjoying the moment as well. It's pushing higher, but you know what? This, to me, does kind of smell a little bit like a possible double top. I don't want to say too early, but if we struggle with the with this barrier, this 9,358, or let's say we can overshoot it, but at the end of the week, if we struggle to remain above that hurdle, then certainly, yes. Maybe this could be seen as a nice double top pattern, with the neckline being this little upside tilted line. Look, again, a lot of ifs. The first if is, can we overcome the current all-time high? Let's see what's going to happen there. Ladies and gentlemen, let's jump very quickly into the Forex world and see what's happening here. Boom, AUDUSD, amazing rally here, amazing move. I talked a lot about this, so my question now is, can we end up testing this little hurdle, 0.6687? So I'm currently aiming for that. There are plenty of good targets, I would say, but yeah, it's very subjective. It's not very objective. And look, for now, everything seems to be fine. The US dollar is declining, and Australian dollar is strengthening against the US dollar. So all is okay, seems to be, at least for now, right? But don't get me wrong, you need just a little bit of risk off environment, and this will shift back down. AUDNZD, beautiful movement here. So we're back to possibly testing the upper side of this rising channel. I talked about it, so I'm going to still keep the rising channel on the chart here, and yeah, that's going to be my kind of orienteer, like where the contours or where it could stick around. For now, yes, I'm aiming to the upside. I want to see what's going to happen with this test of the upper side here. But what's interesting here is that we are trying to test something around here. Now I think that this is going to be a good area of resistance, near, maybe even actually it could, well, look, it could surpass the area of resistance between the 1.1173 and 79 levels, and it could surpass that, and but we could test the upper side very quickly and then reverse back down. So again, very interesting pair. I love it. It's a, like I said, it's one of my favorite ones, and yeah, it's very technical. So like right now, I will be, like I said, I'm going to be monitoring this little territory very carefully. AUDJPY, our risk on, risk off monitor. There we go, breaking the barrier here. I talked a lot about this, so fantastic movement. So I think that there could be some more upside here. 99.16 is my next target. Let's see if we can reach that. This is the highest point, the current highest point of this year, the 99.16. Let's see if we can travel there. A quick update on NZD/USD. Beautiful break here. This is what I was talking about. I said that if we do break this downside line, the next targets are a little bit higher here. Let me just show you what I'm talking about. So basically, we could target this. You know, we can target this peak. Good levels. Like I said, good to watch. But first, let's see what's going to happen with this 0.5995 zone right there. NZD/JPY, similar story, pushing higher, nothing to add there. USDJPY is still in a box, still in a range. Look, we need a clearance. The greater chance for this one seems to be to the downside. Why? The prevailing trend was to the downside before entering this range. So yeah, greater chance for this one is to break out lower. For that, we need some sort of economic downturn. And by downturn, I mean a little bit of profit taking maybe in the indices. So then everybody would start jumping into the Japanese yen. And even if the US dollar does not, let's say, fall off the cliff, the Japanese yen could overrule the US dollar and basically just kind of attract more interest, and that's where we could see USDJPY drifting lower. But again, for that we need to start seeing some profit taking in the indices. USDCAD, oh, there we go, beautiful hold up again near the 200-day EMA. I talked a lot about this, and I said that if we do clear and stay above it, yeah, I'm gonna go higher. But if we continue to trade below that, well, yep, I'm gonna consider it a little bit of a move to the downside. USDCHF dropping, yes, below this upside line. I talked a lot about this, so we retraced back up, retested the broken trend line from below, and yep, now we're examining the 0.7871 zone. So long story short, for now it looks a little bit more bearish than bullish, to be honest. So yeah, I'm still aiming for the current lowest point of this year near the 0.7871. If we can clear that one, yes, a new low will be confirmed. Now, the moment for the EURUSD. So look, yesterday we had a bit of a roller coaster ride. We saw the interest rate decision from the ECB. Let me just remind you what that was. So basically, we kept the rates unchanged, and that was as expected. This is what I was talking about in one of my videos here. Right there, you can check it out. So in a way, everything seems to be fine. The ECB will remain data dependent, and they will continue monitoring carefully the inflation part. So the usual blah blah blah, right? Look, I think that the rally happened in the euro dollar also because the market didn't really like inflation numbers this week, neither the PPI nor the CPI. Maybe somebody was expecting to see higher than the forecast number on the CPI, but it came out as expected. Look, a long story short, for now, given that I believe that the US dollar could remain somewhat on the weaker side, I think that there is a chance for EURUSD to travel higher. However, I would prefer to aim for the current highest point of this year first, and then we'll sort it out in the next stage. EUROJPY still in the rising, ascending triangle pattern, and yeah, if we continue to trade inside this triangle, then certainly no action taken. But again, according to all the TA rules, such patterns tend to break to the upside. So, you know, but again, a confirmation break is needed. So even though they tend to break to the upside, a confirmation break is needed because, look, honestly, I've seen this happening in the opposite direction many times. So I wouldn't say it's, I wouldn't say that it's the very, you know, strong kind of pattern that always follows through. No, it's a very, you need to be very careful with this pattern. Long story short, wait for the clearance of this triangle and then we can do something about it. GBPUSD, we're near key area of resistance. Now, I talked about this and maybe you're tired already of me saying the same thing, but we could be in this inverted head and shoulders pattern. Look, I started saying about this inverted head and shoulders pattern when we were like kind of here. And I said that if this is going to hold, we could see a little bit of retracement back down, and then you know, it could you know, drift back down here again, and the 100-day EMA is the one that, you know, we're watching here. So we got a nice few false breakouts. This was a good confirmation that the market doesn't want to give up, and we rallied again. Now look, this looks like more of a inverted head and shoulders, but a complex inverted head and shoulders, because we have the right shoulder here a little bit kind of messed up, I would say. You know, it's like it's a double, you know, right shoulder. Either way, if you're looking for some higher levels, look, we have a nice strong area of resistance, this 1.3585 zone. Let's get nice clearance of that, and if we can get that nice clearance, amazing. I think more buyers here could join. Let me just highlight this like this. There we go. Right, ladies and gentlemen, gold. Okay, after this week's Tuesday rally here, we retraced back down. Now we're climbing back up, but look at this. I talked about this Fibonacci extension, which is drawn, by the way, from the lowest point of April to the highest point of April, and then to the lowest point of May. There we go. And seems to me that this 3,664 mark is doing a good job. Yes, we surpassed that just briefly, but it still is doing a good job. So let's see if this is eventually going to hold. If it does, I'm considering a little bit of profit taking. Of course, everybody's talking now, even me. I was talking about the psychological 4,000 zone, and for that I need to see a clearance of the 3,664. But even then I will kind of have to look into this and see where the next possible target could be. But for now, let's see what's going to happen with the 3,664 area-ish. If it's going to hold, if it's going to provide a good resistance, then a nice retracement back down could be possible. Silver is unstoppable. Now, silver is the more interesting one, to be honest, to me at least. But look, it broke nicely above this 41.45 zone. Great. So, and I think that silver is trying to make its way towards that psychological $50 mark. So let's see if that's going to happen. But yeah, certainly silver is going through some nice good times. Palladium rally, boom, there we go. Look at this. We're retracing, we're doing that retracement, the retracement of the retracement. And yes, we're pushing back up, and I think that we're going to hit the 61.8. But if we clear the 61.8% here on this Fibonacci retracement, which is drawn from the highest point of July to the lowest point of August, if we do hit this hurdle and we overcome it, I'm going to lean towards the upside, further upside again. Platinum is a little bit on this, you know, on the careful side here, and it's trying to, I think the market participants are trying to be cautious because, again, maybe, just maybe, you know, we could consider this as a rising channel, but look, on a weekly chart, beautiful false breakout. That's why I am still, you know, kind of leaning towards the idea of a rising channel here, meaning that I will get a little bit more comfortable with the downside, to be honest, because the prevailing trend before entering this pattern, the prevailing trend was to the downside. So the greater chance for this one is to break out lower. But again, we'll see. Very quickly on copper, beautiful movement. There we go. We're going to hit my 23.6, I think. Yes, we hit the 200-day EMA, shown as the white line. So now let's see if we're going to stay below that 23.6. If we don't, yes, I'm going to aim for that 38.2. But if we do stay below this hurdle, hey, I'm considering this as a nice bearish flag. Oil. So look, I already talked about oil, and I told you my opinion on oil. I'm leaning towards the downside here a little bit. We're near key area of support of this 61.43 zone. So if we get a nice clearance, look, it's opening a door. I'm still aiming for that psychological $60 mark. We're not far, and I think it's doable. So why not to aim for that? But again, of course, let's not rush into things. We do have some lines here. Maybe this one, but a little bit on the tentative side. Maybe actually this one as well. If I'm choosing between two tentative trend lines, then I will go for this one, for the shorter one. For now, in this specific case, sometimes different, but in this specific case, no, I'll go for this one. And yeah, we're seeing we're in near key area of support. Let's see if we can break that and travel towards that psychological $60 mark. Natural gas, boom, back below the $33 mark. So okay, look, I'm gonna stick to the downside for now, and I'm gonna aim for the current lowest point of August here, near the 2.68 zone. Coffee, my beloved coffee, is holding on nicely here above this downside line. If we continue to trade above this downside line, I'm cautiously bullish. I'm going to get more bullish if we get a push above the 391 territory right there. Jumping into cocoa, rebounding nicely from the 7,205 zone, beautiful. And let's see now if we can climb back above this highlighted zone, which I previously talked about as a good area of support. Now it's taking the role of resistance. Now, let's take a quick glance on wheat, bouncing around, nothing major. Sugar, right, okay, with sugar, I love the fact that it's very technical. And let's see right now if we can break the downside line. If we break the downside line, I'm leaning a little bit more towards the upside. If we cannot break the downside line, and on the contrary, we fall and stay below the 15 and a half territory, then, well, I'm leaning towards the downside. Cotton also, well, look, it seems like it's forming something of a descending triangle pattern. So, bearish indication, of course, but we need to wait for some sort of clarity here. At the moment, I'm just observing it. I like it. Let's wait for a better break. And yes, ladies and gentlemen, finally for dessert. So Bitcoin enjoyed the inflation numbers, or actually, should I say, enjoyed the reaction in the US dollar market yesterday, and there we go. We saw a push further north. I talked about this and said that if we do climb and stay above the 50-day EMA shown as the green line, then yes, my next target is this 117,400 almost ish area. So this is what I'm aiming for right now, and then I'm gonna take it from there. Bitcoin Cash is a little bit on the modest side, to be honest. $600 mark is the barrier that we're watching, or actually maybe 605 zone. We're watching that very carefully. If we can pop above it, I will go towards the 632 area, and then we'll just take it from there. Ethereum pushing upside here, but look, first of all, getting rid of this upside line. Now we're watching this 4,500 zone. If we continue to trade above it, yep, I'm leaning towards the upside. If we don't, well, then, ladies and gentlemen, we're kind of in a range. So we're currently clearing the upper side of this range. And by the way, this is a good example because I talked about this before, that look, some patterns, they do look more bullish, more bearish, that's for sure. There is, on some patterns, there's a bigger percentage that it will break out this way or that way. And this is a good example. The prevailing trend was to the downside, this range, so normally it should break lower. But again, we're not doing that. We're currently breaking the upper side of it. So let's see if this is going to be like a permanent sitting arrangement above this 4,500 zone. If we do continue to trade above it, then yes, I'm going to go higher. But if we don't, hey, maybe we can actually consider that theory of breaking lower again. Ripple pushing above this downside line, great, looking good here, pushing above that psychological 3 level. So if we continue to trade above that 3.3940 zone, somewhere around here, that's what I'm going to aim for. Litecoin. Now, Litecoin is also looking quite interesting. The fact that it's currently trading above all the EMAs on the daily chart, that's fine, that's great. But is anything guaranteed here? Well, no, not really. Look, I think what I need to do, in my opinion, I think I need to get rid of everything and start fresh. I think I'll bring in some lines, previous lines, but it's always good to start fresh. It's always good to start, from scratch, and because it kind of makes your brain work a little bit differently, So look, we are, trying to make our way higher, and we have a few good areas of resistance, but certainly, if look, we need to monitor a few key areas of support. So for now, what I'm seeing here, and on the very, very short term, from the very, very short term perspective, maybe, just maybe, let me just see if this is going to work. Maybe this is like a nice rising channel here. If that's the case, then yep, more sellers here could join in later on. But hey, for now, I don't want to rush into things. For now, like I said, yes, it's just an idea. And look, I will say it this way: I'll try to approach this from a very simplistic side. If we continue to trade above the 50-day EMA, I'm just going to lean towards the upside. Once we start falling below the 50-day EMA, that's where I will start getting a little bit worried. Dogecoin, look at this animal, continues to push higher. We're looking on a break of this downside line. Yes, we reached my 0.2575 territory. I talked about this in the beginning of this week. There we go. Amazing, great result right there. What can I say? Like this. Yep. But again, for this idea to work, I need to see the rate here on Dogecoin staying above this 0.2575. If we have that, then my next target is the highest point of July of this year. The Polka Dot found good resistance near the 200-day EMA. Good move here. Now the question is, can we clear this 200-day EMA? If we can, amazing. I would consider some higher areas. Tron is also looking quite good here, and yes, it's pushing higher. And look, for now, this idea is working out. I said that if we do climb back above the 50-day EMA, my next target is the 0.3439, and then I'll aim for the 0.3682 zone right there, and then we'll take it from there. So for now, everything seems to be okay. As long as we stay above this little hurdle, I'm leaning towards the upside. Ladies and gentlemen, that's it. That's a wrap for this session. I hope you found it useful. Ladies and gentlemen, thank you very much for watching, listening. As always, I would like to, first of all, I would like to apologize for these little technical glitches this week, because again, everything seems to be just out of order. Although it seems like like I said, today I'm running this one from home, and the internet here I have is great, and good upload speed, good download speed. But for some reason there are some issues between the streaming software and the and YouTube. So look, again, hopefully this will fix itself somehow. But yeah, ladies and gentlemen, thank you very much for watching and listening. I really appreciate your time, your views, your likes, your comments, everything. I do appreciate that. So don't forget to like and subscribe. As always, also quick mentioning of the markets trading event, the trading webinar here, which is going to happen on the 23rd of September. So join in. You can find the link in the description of this video, which after the video is finished, I will throw it out there and in there, and you can find in the description the link for that. So yeah, hopefully you found this useful, ladies and gentlemen. Be careful today, as always, and prepare yourself for next week. Next week we have a central bank extravaganza. Yeah, it's going to be just a lot of banks, central banks delivering interest rates. So a lot of market volatility. We will see a lot of market volatility. So be careful with that. And yeah, we'll go from there. Ladies and gentlemen, join me on Monday, 6 o'clock GMT time as always. But I would like to say thank you very much. Stay safe. Have your stop losses in place. Risk only what you can afford to lose. Don't overtrade, and everything will be fine. Have a beautiful trading day, and have even a better weekend. Bye for now.